In this video, I'm going to be breaking down 5 mistakes every trader makes. Obviously, people might be making these mistakes without realizing, or if they are making if they're making these mistakes and you're not sure how to rectify them, then keep watching this video and we'll go and discuss it. Also, if you guys get value from the videos, please like and subscribe. We're growing nicely. I appreciate everyone that has. A lot of good comments, so leave your comments down below and I'll get back to you. Any questions, and if you like the content, then yeah, I'd appreciate it. So let's get into the video. So the first major mistake that every trader makes, especially early on, is they don't have a clear defined plan. So if you don't have a clear strategy, you're essentially gambling. You don't have statistics or data to back up your decision making. So every trade that you place, every decision you make is pretty much luck. If you have a well-defined plan, you've back tested it, and you have a strategy that you know will produce you results long term, then that's perfect. But too many people will get into trading and they don't know what they're doing. They're not trading a set plan, and they're reacting emotionally, and they're not trading with a mechanical edge. They're randomly placing trades based on how they feel, based on what they think, rather than logical steps and entry criteria. So that's a massive problem, because you need to have a plan. You need to be confident in executing your trades. You need to do the same, look for the same opportunities that will produce you the returns long term. So it's so important that you have a trading plan. So that's a necessity. Number 2, the mistake that happens a lot is once you have your plan, people aren't sticking to the plan. So traders are taking trades that aren't there, maybe because of fear of missing out. Maybe you're waiting for it to go back to a price and you're getting in way too early, or you're getting in too late and you missed the trade, so your risk reward's off. Maybe you've had a few losses and you're worried to take the next trade, even though the plan is perfect. There's a perfect entry, but you're reluctant. I did that quite a bit. I was a bit more risk adverse. I struggled to take trades that, even if the plan was perfect and there was an opportunity, I would be fearful to take the trade because I didn't want to keep losing. So yeah, overall, not sticking to the plan, the FOMO, fear of missing out on positions, so you're getting in too early or you're getting in too late. So it's all good having a good strategy and a good plan, but you need to be able to stick to the plan when you've got it. Because if you're not sticking to the plan, you don't have a plan effectively, you're gambling. So it's so important that you stick to the trading plan and you don't deviate from that. Once you're sticking to the plan and you're doing well, maybe you've had a good couple of weeks or a good month or whatever, a massive problem, and this is a massive issue that I see a lot of traders make, is they then system swap. So they jump from strategy to strategy. So once they've had their plan, they've executed their plan, and they naturally take a few losses, because no strategy wins 100%. You're going to have losing periods, you're going to have losing streaks, like you're going to have winning streaks. But when you have losing streaks, what people tend to do, and it is a natural human reaction, is you like to jump and think, oh, let's change this, let's change that. And you don't allow the edge to play out by continuously taking the trades that you know you should be taking. You sit there and look for other opportunities, other strategies, other styles. And by doing that, you're resetting the edge effectively, because you're now trading a new style with new edge, new probabilities, new outcomes. So you need to make sure that even if you have a few losses in a row, that you stick to your strategy. You don't swap strategies. You don't look to change. You can look to tweak things, but don't look to change your whole style or system, because it's a natural reaction. When you lose, you want to change things. But if you took the trade that you know you should take and you lost, that has to be a winner in your head. If you take the trade that was a perfect setup and it ticked every single box, but the trade lost, that's a win. So don't look to change strategies. Don't look for other systems that will make you more money or better returns, because you're going to be in this perpetual cycle of just going round in circles. Then you'll try a new strategy, that will start losing. You'll have a few losses with that. Then you'll look to swap, go back, and it can get into this cycle. So you have to stick with your strategy. Another mistake a lot of traders make is the unrealistic expectations, expecting to master the strategy and their emotions relatively quickly. Everybody does this at different rates at different times. Some traders might be able to do it a lot quicker than others, just naturally. So don't rush it. There's going to be people further ahead than you and people further behind. Stick to your own processes, keep improving as best you can, and don't rush trying to get funding, trying to go for these prop firms and get big capital. Work on getting the skill set, work on learning your craft and being competent at trading. And once you've mastered that and you know when you're ready and you're hitting good, consistent, profitable months, then look to go for funding. But don't rush thinking, oh, I can get 100k, and then if I make 5%, I can make 5 grand. Like, oh, make 5% on a consistently, even if it's not much money, if it's on a small account, and gradually learn the craft, improve, and then when you're ready, go for funding. But don't rush. And lastly, don't think this is spoken about too much, but it massively affected me, and I made this mistake, is the moment I stopped looking at loads of traders, there's nothing wrong with looking at people that you aspire to be like or you're motivated by, but when I kept looking on Instagram at different traders, there'd be days where I wouldn't take a trade, and then they would take a trade and show their profits, and I'd sit there and be like, maybe I should change my strategy, maybe I should trade like them if they're doing so well. And then there'd be other days where I take a trade, they don't, I lost, and I think, well, yeah, no, maybe I shouldn't trade. Like, sometimes by looking at different traders, every trader trades differently. Some people trade similarly, but a lot of traders can trade different strategies, different styles, and still make money. So when you're buying a currency pair or a stock or whatever it may be, from Forex, it might be, a currency pair, they might be sitting on their hands. There might not be an entry for them, and vice versa. They might be selling when you're not doing anything. But by looking at these traders and looking at what they're doing, yes, it can be motivational if you know they're good and they're consistent and they're doing well, but it can also distract you and make you question your strategy and deviate you from what you're doing. So just be careful with that. It's something that's not really spoken about, but I think it's massively important, because if you're getting distracted by the traders and what they're selling and what they're buying and how profitable their month was, you can get distracted with your journey, your process of what you need to be doing. So I think that's very important to know. So if you guys got value from this video and you enjoyed it, please like and subscribe. Like I say, we're on a road to 1,000 subscribers, which is incredible. I can't believe we're approaching that. So if you guys can help out by liking, commenting your thoughts down below. If you got value, I'll get back to you. And yeah, I appreciate the support in the videos. So yeah, I'll see you in the next video, guys. Thank you.